Hi, I'm Gordon Lamphere, and welcome to the Real Finds podcast, where we have real conversations with key entrepreneurs, activists, and researchers who are shaping the real estate industry and, as a result, our world. On today's podcast, we'll be speaking with Anita Verma-Lallian. Anita is a successful commercial real estate investor and developer who founded Arizona Land Consulting, a firm that manages more than $1 billion in raw land investment opportunities, along with Anita founding Camelback Productions, a film company producing media out of Arizona. On the podcast, we dive into the world of raw land plays, film production, and data centers. Many of the deals we discuss on the podcast have been featured in the New York Times and have seen investment from some of the most prominent names in tech. If you're interested in the world of investing in and around data centers, today's episode is well worth a listen.
Anita, thank you so much for hopping on the podcast today.
Thanks so much, Gordon. I'm excited to be here today.
So what got you into the world of real estate?
Yeah, that's a great question. I have been in this world for many years. My family has a long history of real estate development. My dad, he's been a land developer probably for about 40 years now. And so I've, kind of grown up. It's been in the family for many years, and that's how I originally got into it. And we've evolved a lot since. We've been doing land development, but a lot of different types. We started with like residential home development, and now we're doing data centers. So it's been exciting and very different.
So what got you into the world of data centers? That's not basically the easiest path for most investors to get involved in. So why data centers?
Yeah, I would say we started getting into data centers probably 2 or 3 years ago. And I think at that point, there was just a lot of developers, data center developers, hyperscalers coming to Arizona. Arizona is a great market for data centers just because there's not a lot of natural disasters. Land is cheaper, power is cheaper. And so it was something we were developing a lot of industrial sites at that time. And the infrastructure planning is similar to data centers. Industrial projects kind of follow a very similar path to what data centers do. So we thought we would, kind of get into that space. We did a big deal with Tract last year and worked, for a couple of years getting all that, kind of getting the data center development in place. So that's really what spurred my interest in it.
So what does a good data center deal actually look like? It's not every day that you see data center deals, even though they're increasing at a very fast pace. And so I'm curious, what does a good deal look like?
Yeah, I think the main thing with data centers right now is power. That's the biggest piece that everyone's looking to solve for. So being next to, transmission lines, substations, natural gas lines, anything where you can get power solutions, that's typically the main thing. You also want, a large piece of land. You want a piece of land where a data center development will likely be approved on it. You don't necessarily want to be next to a lot of residential development because there may be pushback from residents and neighbors. So I think it would be, kind of a combination of power, good property with, where the development will be supported. And then, pricing is always a factor as well.
And so how do you end up targeting those sites? It's a lot to find a site that can handle like 1.5 gigawatts.
Yeah.
Like what mechanisms are you using to target sites that work, particularly in Arizona?
Yeah, I think, we're looking for large scale sites right now. So that's kind of been our main thing. We're looking to do, kind of these massive data center campuses. And so it's just finding a site that's big enough. We're looking for private land. And so there's not a lot of sites that meet that criteria. And then when you start to look at, kind of the power feasibility in addition to that, it's a very small amount of properties that actually make sense. So we're kind of just targeting what any of those properties where we feel like it could be viable.
So how often is it a situation where it's the property and then you look at mechanisms to add, adding in terms of power output or adding in terms of a parcel assemblage, or how often is it just something that actually just generally works from the start? Are you constructing sites and turning them into sites that are site ready, or is it more of a search and find?
I think it's a little bit more of a search and find. I think there's a lot of sites that could make sense, but they need some development or they need some work to kind of get there. If you look at the example of the property that we sold last year to Tract, which is 2,000 acres, when we bought that site, it was residential land. It didn't have water for residential development. So we sort of looked at that and we were like, what else could we do on that site? And a data center just made a lot of sense. So it's not typical that you'll find a site that's shovel ready. Usually there's some work that needs to get done. And then, when you're looking to find power, you're usually having to do numerous studies with the utilities to see what they can offer and what's viable. So I wouldn't say it's properties that are, just ready to go. It's usually properties that have to sort of be developed for a data center.
So one of the things that data centers require is a lot of liquid capital, a lot of financial backing. And I'm curious how that process has been for you, both as a developer and also going out into the market and, trying to find financial backing in a low liquidity market.
Yeah. I think that's a great question. I think right now, for a lot of investors, data centers have been something of interest. I think with the boom in AI, a lot of tech investors particularly, are very interested in, sort of getting into this space. We have, in some of the recent deals we've done, we have been bringing in some tech investors from the Bay Area that have sort of the technical expertise of how data centers work, the mechanics of how the actual data center functions, and then we're coming in with the real estate expertise and, sort of helping, we're kind of coming in and providing that real estate knowledge as to how these projects can get built. So it's been a good collaboration, just kind of merging tech and real estate. And I think it's been interesting that even though, like you said, there's not a lot of liquidity in the market right now, I think for data centers, we've kind of seen the opposite, where there is a lot of capital that people are looking to deploy when it comes to data centers, particularly for AI.
Now, when we're looking at deploying capital, one of the interesting things that people are looking at is exit strategy ultimately, because people only want to throw, millions or billions of dollars at a deal if they know they can get the money out in time, right? And so I'm curious, how have you been pursuing exit strategies? Are we talking about leases where you're getting back over long term? Are you build and sell and flip?
Yeah.
How's kind of this process primarily been for you guys?
Yeah, I think that's a great question. I think each site and project has been a little bit different. With the project that we did last year with Tract, it was kind of we sort of put the land together, and then it was more of a flip to them, and then they're going to actually build the data centers. For a project that we bought earlier this year, we're actually looking to develop that, and we're in active discussions with power providers and developers on sort of joint ventures. So we may build it and lease it. We may just build and sell. And we're sort of open to different structures as to how far we take that as well. If if there was an opportunity to exit faster, we would entertain it, definitely. But I think as of right now, we plan to build.
One of the other things that, that I see coming up from investors who are interested in either looking at data centers or a lot of more tech-related industrial real estate is they look at it as either single tenant or multi-tenant properties. I'm curious how you've seen that play out within your portfolio of developments. Are you typically building multi-tenant data centers, or is it more of a single tenant user model?
Yeah, I think for the size and scale of projects we're doing, it'll be multi-tenant. There is, there are every now and then there are groups that'll come in and say they want the whole site. So there may be some groups that need a very large presence, but I think for the most part, it'll likely be multi-tenant.
And then, why is that? Is that there's only so few groups that can bite off that larger project, or what's the driver in terms of a multi-tenant versus single tenant product?
Yeah, I think it's, there's not a lot of groups that can buy so much at once. I think it's also, we're looking at doing a massive, our projects can be pretty massive. So there in Arizona, there's a lot of companies that already have kind of have a data center presence, like Microsoft, Google, Meta. They already have campuses, so this would likely be an addition to what they already have. And that's why my sense is it'll be multi-tenant, but there are, some groups out there like OpenAI that may just buy the whole site. So it's hard to say for sure, but my sense is it would be multi-tenant.
So I'll admit I'm not super familiar with the Arizona market. My specialty is very much the Midwest. Yeah. And one of our investors heard that you'd be coming on and was curious how Arizona plays out in particular with issues like power and water constraints.
Yep.
Us Midwesterners, we come from a very flat land, but also land that has a lot of water. And I'm curious, how has water played out in Arizona with the grid and power?
Yeah, no, that's a great question. I think, power is definitely a concern for data centers everywhere, all over the country. I think most utilities are saying it could take anywhere from 10 to 15 years to get power. So I think right now what most developers are looking to do is looking at, sort of like off-grid solutions, whether that's using natural gas, solar, and different combinations for power. That's something that we're sort of exploring at this point. And so I think that the power constraint is sort of universal to all regions as far as data centers are concerned. And then as far as water goes, Arizona does have, for the projects that we've done so far, water hasn't really been a concern. I think a lot of the newer data center technologies are very efficient when it comes to water. And so they're not large water users. So that's not really a concern for us. I think power is a little bit, usually the bigger concern people have when they're looking to build these out.
And then one of the other things that I was fascinated when we had you lined up is we've done a lot of conversations with individuals on the periphery of the film studio world.
Yep.
I think that I've been always impressed at kind of how real estate and film and media can kind of blend together. And so I was curious, what got you into, film studio development and kind of, the media world in general?
Yeah, I think that's a great question. I have always been fascinated by media, movies, and that's sort of how we started. We started a film production company called Camelback Productions 3 years ago. And so we really just started by investing in independent film. And I think one of my initial objectives when we started the film when I started Camelback Productions was we wanted to bring more film production to Arizona. Arizona a few years ago did introduce some tax credits, which are favorable for film production to take place in Arizona. And I think the missing piece has just been the actual studio space, which we haven't just seen a lot of that being built out. So that's sort of the impetus as to how I'm merging the two worlds of real estate and building a film studio is very similar to building any sort of industrial development or even a data center in terms of, just kind of these big warehouse type boxes. And so, that's my area of expertise. So it kind of made sense to converge both worlds and bring more production. A lot of production is leaving the country. And so I think there's a lot of push for more production to happen here. And so I think we want to play a role into that.
So talking about playing a role in production, where's some of the crossover between the world of media and the world of data centers? I mean, to me, it would seem like it would be not as easy a crossover, but at the same time, I'm an outsider to both communities. So where is that crossover?
Yeah, I think, with data centers, there's just a way to, if you have a data center adjacent or close by to a film studio, for instance, you can run things a lot more efficiently. Things can be done, there's less latency, and so things, productions can happen more efficiently, more cost effectively. And then, we're also envisioning, as a part of the film studio, different features and elements which having data centers and smart grids just help just kind of run everything more efficiently. So I think that's sort of where I see the crossover being. I think with AI, things will just start things will start to be happening faster and cheaper. And I think we're really trying to just lean into that and, kind of build out this infrastructure to allow that to happen.
And how have you seen that AI play out? Is it that studios are using AI more in production? Is that where you see that driver coming from?
Yeah, I think so. I think for a lot of the productions that I've been involved in, when sort of look at AI for ways to reduce budgets and things like that, your budgets can just go a lot further. So it's ways to just have more efficiency in how your money is being spent. And I think that's sort of the main thing. I think even with editing and putting movies together, AI can create a big role there as well.
So when we talk about creating a big world and a big role, I'm curious, how do you look at like today's low liquidity market and putting together these big land deals and particularly in Arizona?
Mm-hmm.
Is there a particular strategy you're using to unlock value in sites, or is it about putting partnerships together and then finding unique opportunities?
Yeah, I think it's been, I think mostly putting partnerships together and finding opportunities. Since it is a low liquidity environment, I think there are more opportunities just due to that fact. I think there's, right now is a great time to add on to the portfolio because there's not a lot of transactions taking place. So there's less competition for some of the more viable properties, and so I think that's been our strategy. Is in this market is sort of when we need to take advantage of the situation and add on to our portfolio. And as the market conditions improve, we think we'll be strongly positioned with the assets that we hold.
How do you balance the role between being a capital allocator and someone who's a developer? I've always found that it's with our practice, we've done a lot of development in the Chicagoland area, and generally it can be a very different role.
Yeah.
How have you found that balance to be?
Yeah, I think that's a great question. I think development, it kind of makes sense in certain environments and certain projects, and it is always a factor of market conditions as well. Right now, for example, we're doing a lot of data center development because rates aren't affecting the end customers as much, and what's happening kind of on a macroeconomic level isn't really impacting that market. However, if you look at, say, multifamily, we have a lot of multifamily projects. That's not something that we're actively developing at this point, just because there is a little bit of pricing pressure on end customers as far as what they can pay. And so I think we're waiting for some of the uncertainty with rates and things like that to play out before we start developing. So I think the way to just balance that is when the opportunity is right and the market conditions are right, we'll develop. Otherwise, we're sort of just allocating capital and holding for the right opportunity.
Do you think that's one of the biggest drivers that's driving product like film studios and tech, is that there's been so much liquidity flooding into the market that it's creating a much bigger gap for profitability of projects versus, some of the other product that we see in the market, like multifamily, there's a tremendous pressure on affordability, and there's really not a lot of margin there sometimes. Do you think that's the primary driver that's made things successful?
I think so. Yeah. I think it's, just like you said, I think it's usually a matter of margin, like what type of development is going to give you a higher profit margin. And I think, with some things like multifamily or residential developments, we're just not seeing that, like, for example, home builders right now, are seeing margins in the 10% or even lower range. So there's not a lot of home building happening right now, which is, scary given the housing crisis that we're in right now. But other types of development, the margins are a lot higher, and you're seeing those happen. So I think certain asset classes are affected a little bit more than others, and I think that's kind of what's dictating what's selling right now and what's not.
So one of the things I know you mentioned earlier was that energy is dictating where a lot of sites are feasible and where they're not, for a tech, and even we see it on the high level manufacturing side as well. How have you seen that play out in terms of communities and energy companies playing ball to grow the feasibility of sites? I know we've had individuals that have done developments in Texas and a number of other states and there's a great challenge in just finding enough natural gas that's in the system. And so how have you seen that play out, and how have you been able to get more energy to sites that maybe previously didn't have it?
Yeah. It's definitely been a challenge. Just recently, Transwestern announced a $2 billion natural gas line that's going to be built in Arizona. Katie Hobbs was, sort of backing that. So that's been great for a lot of land that would not have had power otherwise. So a lot of landowners are now looking into that natural gas line and seeing if they could use that as a bridge solution to power their sites in the short term. So, we have seen, luckily, there's been support on the political level to get some of these projects built. So that's just one example of how, the politicians are kind of helping move this forward.
And when the politicians haven't moved it forward, have you found that there are alternatives that on site work, at least in the temporary period, to bridge energy, in terms of, have you applied nuclear or modular generators or all sorts of alternative bridges?
Yeah, there's quite a few. I think solar is also an interesting alternate bridge. What we're trying to understand right now is which solution is the most cost effective, and so
Yeah.
that's sort of the key to it. There's a lot of solutions. You have different technologies every day that are, sort of a power solution. But I think some of the newer technologies tend to be more expensive. So it's just a matter of figuring out what makes the most sense for your project. I think sustainability is also a factor. And I think, personally, I like the idea of renewables because it's more sustainable for the environment. So that's something that we're exploring. I think natural gas, we do happen to be very close to Palo Verde nuclear power plant. So that's also something that we're exploring. So there's some options, but I can't tell you exactly which one is the best one. It sort of just depends on each site and project.
We've heard very similar things from other developers. So in terms of that, a lot of other developers are looking in this capital market to move towards, other maybe potential platforms beyond just traditional development with investors and exits. Are you looking at expanding your fund or expanding into a REIT, or is your current model effective and you just want to keep building and making a profit?
Yeah, we've speak about it all the time. Like if we want to switch to more of a fund model or a REIT, I think for us the way that we've been raising capital and acquiring properties, it has been working pretty effectively. So I think we're going to continue, sort of the model that we've been following. And then in the future, if we think that it would be better suited to do a fund, we may sort of look at, doing like a data center fund or a fund for a specific type of development. So investors are, kind of know what they're getting into. But for right now, I think we're going to kind of do it on a deal by deal basis.
So it is always good to know what you're getting into. And we're going to get into the final four. It's a great way to wrap things up and kind of learn a little bit more about you and learn a little bit more about where we think real estate might be going.
Okay.
And one of the questions that I'd love to ask you is, what do you think is going to change the most about real estate going forward, let's say 10 years out?
Yeah. I think AI will play a big role in sort of how I see real estate being developed. I think you'll see a lot of AI models that will help with site selection, with infrastructure planning, making sites smart in the sense that they're running efficiently. So I really see that transition happening more and more in the future. You'll see a lot of things being built with tech and sustainability in mind. So I'm excited to kind of see that progression happen, but I view that to sort of be the biggest change moving forward.
And in terms of change, one of the ways that we always like to encourage change on the podcast is to take a step back in time. And our podcast listeners skew a little younger. We're not talking about necessarily Gen Alpha or Gen Beta, but like a little bit younger. And many of them who are in their 20s they're starting out their career. And I'm curious if you could give one little bit of advice to a young Anita at the start of her career. What would it be?
Yeah, I would say to, sort of take the risks and not overthink it. And I think a lot of when you're younger, you question yourself and you sort of try to wait for the perfect opportunity to do things. And I would just say, take that risk, make sure it's a calculated risk and you're well educated and informed, but not to, overthink it and miss opportunities. Because I do think in real estate, the market, just from my experience, it's so cyclical and, every year brings something different. And I think there isn't really such a thing as a perfect environment. So I would just say, take that risk and move forward and learn as much as you can.
So one of the ways we like to learn as much as we can is through books.
Yeah.
There's all sorts of media to consume. I know one of your investors is from the All In podcast, and there are plenty of great podcasts out there.
Yeah.
But if our folks could pick up a book, what would it be?
So a book that I love, and it's not really real estate focused, but it's Jay Shetty's book, Think Like a Monk. And I think why I love that book is it helps you just have mental clarity, which I think is so important when you're operating in this world. And it sort of helps reduce the noise so you can be a little bit more focused in what you're trying to accomplish and make decisions. So I would say that's a book that I highly recommend to people.
So we don't like to think like a monk. And I don't know if I'm going to get there. But I certainly can try to get one thing out of you. And that's, we believe that the men and women who are in the arena tend to know the other men and women in the arena that we should reach out to.
Mm-hmm.
And so I'm curious, who should be the next voice that we have on the podcast?
That's a great question. As far as real estate goes or tech, I guess, do you want to just focus on real estate?
I mean, real estate's great, but any voices are always appreciated.
Yeah, I think Chamath would be great. I think he has he's just been such a prolific investor in so many different things, and I think kind of seeing how he's transitioned and now he's taking an interest in real estate. I think that would be an interesting discussion to kind of bring it full circle as to what is compelling him to look into real estate more now than ever before.
Well, we'd always appreciate a connection, and I think he's got a unique voice in the market. But if somebody wants to reach out and learn a little bit more about you and what you guys are doing down in Arizona, what's the best way to get in contact?
Yeah, my website is a good way, or I'm on social. I'm on LinkedIn as Anita Verma-Lallian, Instagram. So any of those would be great ways to reach out.
Anita, thank you so much for hopping on the podcast, and we have to have you on in the future.
Yeah, thanks, Gordon. Loved it.
Thanks again to Anita. We appreciate her insights. If you enjoy the podcast, please give us a like, a 5-star rating, and a review. Your comments, interactions, and subscriptions truly matter and help us continue to provide quality guests. You can follow us on YouTube, Spotify, or wherever you get your podcasts. I'm Gordon Lamphere with the Real Finds Podcast. Thank you for listening.